Hey there, Sam here from EasyTradingSignals.com, and today we're going to take a little look at one of my favorite trading tools, and that is Elliott waves. Now there's a whole lot of information about Elliott waves on the internet, and a lot of it really just makes it a lot more confusing than making it actually helpful. So what I'm going to try and do in a very short little video here is to just break down the most important aspects that will really help you in your trading, and hopefully just kind of make things a little bit clearer. Now, instead of showing all of the theory, all of the different ways, blah, 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 I'm just going to show you directly on a trading chart exactly what I'm talking about, right? That way, we're actually looking at something real and not just something that's fabricated or something that's optimal. Okay, so right now I've got my MetaTrader set to 15 minutes on the Aussie dollar. And I want you to take a look at one particular area here. So I'm going to try and draw on the screen. I hope it works. So let's see. Right, so this area here, that would be the first wave. This would be the second. Oops. That's kind of cool, but not really what I wanted. I need to zoom out. And get that back. All right. So 1, 2, 3. Okay, so 1, 2, 3, 4, 5. Right, those are the 5 waves. So with Elliott trading, you basically have two main types of movements that you need to know about. The one that you need to look out for is called the impulsive or motive wave. It has 5 movements, okay, and the other one is corrective moves, and corrective moves are mostly sideways. That's a little bit deceptive because sometimes they do move quite violently, as you can see over here, but it's still called a corrective wave because it is against the general trend. Right, so let me just clear that out. So here we see it over a number of days, an impulsive wave over a number of days. This whole thing here, I'll try and get my drawing tool in again. This thing over here, all of it, is spanning a couple of days, and it is one impulsive wave, or one motive wave, with 5 movements to it. Now the cool thing about Elliott waves is that they are fractal. What do I mean by fractal? You can go look up about fractals, they're actually pretty cool, but basically it means that larger patterns are repeated in smaller subsections, and it just kind of catapults in on itself. So what do I mean by that? What I mean is that this first section over here is in itself an impulsive wave, as is this, as is that. So we have 3 impulsive waves that make up one larger impulsive wave with 2 corrections in between. So why is this important when you're trading? Well, the reason why it's very important in your trading is people very often get caught by wave number 5. So wave number 5 could be this guy here. and I think you can see what happens here. So people happily trade. Say, oh, okay, the market's going down, and then once the market hits this point over here, I say, oh, okay, great, we're done. But over here, they're convinced that the market is now going to go up. So what happens is they pile in and they start buying, only to hit this over here, this level, and then it plummets down again, the fifth. After that, there's normally quite a bit of confusion, and that's what you can see over there. Alright, a lot of sideways movements. And this pattern repeats itself, not just over days, but also over hours and also over minutes. So, if I go in to this this particular wave, and I just go down to 5 minutes, and excuse me, I'll have to go and look for it because it's probably going to jump around. There we go. So, if you take a look at this, here you can, let's actually go one level down. There we go. Right, so look at that. So once again, you have a set of 5. 1, 2, 3, 4, 5. Right? And then you've got a sideways movement, and then it repeats itself again. Oops, sorry about that. And then it repeats itself again. One, 2, 3, 4, 5. There. So this type of thing happens over and over and over and over, and if you're not aware of how this works, then you basically end up in trouble a lot of times, because you simply don't know how the market is reacting, and you're caught unawares. So, don't get too confused, trying to do exact counts. It's never going to work. But you have to watch out for the fifth wave, right? So when you see a sharp movement in any direction, you got to watch out for the fifth wave. And if you look down here, let's look at another little example here. They're not always perfect, of course, but you can clearly see what's going on here. So I hope, right? So here we have it again. 1, 2, 3, 4, 5. So the one to watch out for is always the fifth wave over here. Now, ideally, you want to start trading after you've seen that there. And normally how you do that is to look out for, there we go, zooming in again. Is you can watch out for support and resistance levels. Okay, and once it moves past that, you know that you're good. But if you really want to feel a little bit more adventurous, or a little bit more skilled, what you can do is you can actually try and count 3 waves inside your correction. So if we look at that, so the sideways moves are a little bit more tricky. Okay, so I'd say that look, here we have our main impulsive move again. 1, 2, 3, 4, 5. Okay, and here we have our correction, and that should move in basically 3. So it'll be this area over here. 1, 2, 3. I know that looks messy. But if you can see 3 main movements, remember it's going to go sideways and might extend itself, then you know that you're possibly looking at the start of the rest of the impulsive move. Or you can simply wait until you've broken through resistance, or on the flip side, a support level. So I'm going to carry on here a little bit more and just show you one more example that that I've marked over here. If I can find it now, there we go. So I'm going to go down to 1 minute level for this one. There we go. Alrighty, so let's just zoom in a little bit on that, just to show you that it occurs all over. So once again, here we are looking at 1 minute level. So we've now looked at 15 minutes, well, 5 minutes, 15 minutes that spanned over days, and here we're looking at 1 minute, and as you can see, we're looking at pretty much the same thing, the same pattern. So 1, 2, 3, 4, 5. 5 waves. And once again, you can count. This one's actually nicer to count. So if we zoom in a little bit more, you will be able to maybe trace here with me, and you'll see that if you have 1, 2, 3, oops, that was my mistake. Let's see, 1, 2, oh, there you go, zooming in. Gets tricky. Okay. 1, 2, 3, 4, 5. Okay, and here we have 1, 2, 3, and then you're starting again. And I'm gonna not draw that because it just gets messy. But I hope by now you've been able to actually see the pattern that we're looking at here, and the pattern of 5 waves, and then the 3-wave correction. And those are the main things to remember. When you see the market moving strongly in a direction, when it's strongly trending, you're going to be watching out for 5 waves. And it's going to complete 5 waves. So don't get caught after the 4th, thinking that the whole movement is over. And when the market moves sideways, you're going to see basically 3 moves, 3 main moves, and they kind of go all over the show. And they're really difficult, just to go try and count. So basically, with your sideways moves, we'll always, or mainly follow after big impulsive moves, and the corrective moves, the sideways moves, can be pretty big as well, and sometimes they even do have elements of sort of an impulsive streak to it. But I'm not going to go into all that detail at this moment. They're called zigzags. But basically, you should just remember that if you can identify 5 waves, or at least if you identify strong movements in the beginning of the market, drill down to 1 minute, and if you see, you got a strong move up or down, then you know what's going to come on the higher levels. Even on the 5 or 15 minute level, you can watch out for the same type of movement, because the one builds on top of the other one. So be on the lookout for those, and I hope that helps you in your trading. And as always, trade easy.